And here we are. So welcome everyone. This is John, and it is now my pleasure and honor to be here and talk about trader psychology in terms of kind of what it means to me and what I've done with it. And I want to go a little above and beyond what I've talked about before. I've done in my book, I've talked about kind of trader psychology, and I've talked about trader psychology in the past. And I didn't want to do the same presentation that I've talked about this before. A lot of those concepts are obviously important, but I wanted to just kind of bring some new thoughts into it. And a lot of this has to do with just listening to traders where what I see in a lot of traders is that their the main issue that they have isn't so much finding setups, it's managing their accounts and learning to do that in a way that provides them the opportunity to do this for a living. So that's going to be a lot of what I'm going to be focusing on. I'm also going to be focusing on the mental outlook of a successful speculator, okay? Because that is really what we're doing is on a daily basis, whether it's a day trade or a swing trade, is speculating. And I think it's important to discern that and have that analysis right on your mind, okay? So with that being said, let's jump right into this. And the first thing that I think it's important to understand, and this is why a lot of people really get freaked out when they first get into trading, and why most of us that have been successful at this, it's only after a long time, because we have to wrestle with a lot of these things, is that you have to understand that human beings are designed in one way and one way only, and every human being is addicted to trying to be right and not be wrong, okay? And think about that. You know, think about that in all aspects of your life, okay? If you're in an argument, what are you doing? Okay, you're trying to be right, make the other person wrong. If it's a discussion, if it's, whatever it is, you want to find a way to do that. And if you're aware of it, that's great. Then you can step back and realize that that's just a game that humans play. If you're unaware of it, then that rules your entire life. Okay? And the other thing is human beings are designed to do everything in such a way as to avoid failure. Okay? And this can be, again, in every aspect of their life. Just from the example I get here is just as simple as saying, if you have a significant other and you love them, or there's somebody that you like or going out with and you love them, a lot of times you'll play all these mental games and either you don't tell them or you just different things where you avoid having the failure of finding out if they love you back in return. Okay, it's just something as simple as that. All right. And it's just how human beings are designed. And I mean, I can think of countless examples like this. If you guys want to type in, if you think of any examples like this, how human beings are designed to automatically avoid failure. And a lot of it is just how they reinterpret events to fit their needs, okay? And, it could even be like, okay, I'm not going to drink anymore, but then they're at a party and it's like, oh, well, everybody's drinking, so I had one. So, now it's not a failure on their part because everybody else was drinking, right? So that's the kind of thing there. And you know what? Let me look at here if I've got this questions right. Okay. So if you think about this, then it's that if everything that we do as human beings in every situation we're in, we're addicted to being right and we're designed to avoid failure. And again, by avoiding failure, it means reinterpreting events so it wasn't a failure, okay? Then what happens when human beings get into trading? There's a lot of issues there. So the problem with trading is that the results are right there on the P&L, so it's impossible to avoid, all right? And humans have a hard time learning how to deal with this because in every other area of their life, they can gloss over and reinterpret situations to make it seem to them that they actually did not fail, all right? You get fired from a job. You can reinterpret the situation that it wasn't your fault. Everybody was out to get you. All that different kind of stuff. You got a speeding ticket. Well, it wasn't your fault. There just happened to be a police officer this day. It was your fault. You were speeding. But again, the way the human brain is designed, the way that the identity is set up is to reinterpret every situation or to take actions in such a way as that failure is impossible. Okay? So hopefully you guys get that and that's sinking in. I can think of an example in my own life, and I'm trying to think of either a trading example or a non-trading example, but it could be as simple as playing with your kids and you see other kids in the park, and they're all kicking the soccer ball around, and this is like, okay, so there was a bunch of 7-year-old kids at the park, and James wanted to go play, and I could feel myself going, oh, don't go out there, because he was 5, and he wasn't going to be able to kick the ball as well as them, and there was going to be other parents that are going, oh, look that's John's kid not able to kick the ball, right? But in my brain, I could see what was going on there and say, oh, well, that's stupid. I'm just trying to, avoid failure, quote unquote, instead of letting my kid have fun. Okay, so it's just kind of a simple example of that, but it ranges from everything. I mean, everything that you do. So that's the thing. That's the thing to be aware of. So, and I want to look here at these. There's something happening on my questions where I'm actually not seeing them. So if you guys are typing things that I'm not seeing, that's okay. I'll just kind of go right on to it. But I think I accidentally closed it. So I'll take a look at that in a second as I get through this. So if you guys are getting that, and you see and think of other areas, in your own life where that happens, just think how that comes into play into trading. Okay, so then trading is the only profession in the world where people have to confront the brutal honesty with themselves and their P&L, all right? And the problem with that is twofold. One, people have to learn how to deal with real failure, okay? And two, you have to learn to take responsibility for your own trades, because what happens a lot of times is when people get into a losing trade, who do they blame? Okay, they blame their platform. They blame the market, all right? They blame that their spouse walked in on them when they were trading, okay? It wasn't their fault. And that's the thing. And that's where this thing screws us up, because we take how human beings are naturally designed to avoid failure at all costs, okay, and to always be right, and we take that into trading, and what we do is, instead of acknowledging our losses, as part of trading, we gloss over it, okay? We blame somebody else. We don't learn from it, and we keep doing the same thing over and over and over again, and we never make it as a trader. All right, and that's a very, very difficult thing, a difficult place to be in, and it causes traders an extreme amount of frustration, because they have to come face to face with the fact that they're failing at trading, and they got to keep coming up with excuses why they actually aren't failing. Okay, it wasn't my fault. And in that scenario and in that cycle, a trader can never do this for a living. Okay, you can spend years doing that, because you'll lose, make a little bit back, lose, but you're still in the cycle of trying to not be a failure. All right, and so hopefully that sinks in, because it is really, really critical in trading just to set all that aside. I mean, literally take all these concepts of what it means, what failure means to you, and literally just setting it aside, because it has no place in trading. And going in and starting to really look at things objectively. And that if you do take a trade and there's a loss, that it has nothing to do with being a failure on your part. And don't, if you catch yourself blaming the platform or blaming the, blaming the charts or whatever, blaming the hedge funds, blaming Bernanke, all you're doing is falling into the trap of being a human being. And unfortunately, being a human being does not work in trading, okay? You cannot fall into that trap and be a successful trader. So with that frame of mind, we want to look at some strategies kind of for dealing with that. First thing I want to do is just kind of go through some basic, I think it's important to have, what I call trading maxims, trading, thoughts on speculating, thoughts on trading, just to kind of get a general idea of the best way that these work and the best way that these are set up. All right, and here's some things that I've found that have worked well for me over the years and years and years of doing this. Okay, first is be cautious and careful in setting up a trade. When your level is finally hit, be bold in your execution of the trade. Okay, and what I see a lot of times is, traders may be bold in their trade, meaning they'll take on this huge position in relation to their account size, but they weren't cautious in setting it up, and that's what leads to a lot of problems. Okay, and I'm a real big proponent of just being careful, being patient when you're setting up a trade. But man, when everything sets up, you go for the jugular and you kill it. All right, and I think that's critical. The other thing I found in trading is that ruin often overtakes those who have nerve. Okay, who have more nerve than money. The stronger the nerve, the more probability of staying in the trade too long and blowing out an account. all right? Now, if you've got $1 million account and you're trading 10 lots, you can afford to sit there and watch it go against you by 100 points, okay? 1,000 ticks or whatever it is. But if you've got a $10,000 account and you're trading a 10 lot, right, you're going to get ruined. The stronger the nerve you have, the more likely it is that you will be ruined, okay? So just kind of keep that in mind. Having nerve, okay, having balls of steel, quote unquote, is actually not that good of a thing in trading. You've got to look at things more objectively than that. And then the other thing is acting promptly at the first sign of danger. First sign of danger. You actually don't have to get all in or all out of the trade, okay? If you're in a trade and you're feeling a little uncomfortable with it, cut half of it loose. You can still retain half that position. Wait until things kind of come together more. And that's typically, it's a good idea to respect that, okay? And it's also training you to act at the first sign of danger, all right? Another thought on this. If you tend to take small profits, then you have to take small losses, okay? I know it seems common sense, but I see a lot of people who will, and again, from my own personal experience, is that a lot of times they'll take little profits, and they'll make $100, they'll make $100, they'll make $100, and then when they have the losing trade, it's $1,000, okay? That does not work. If you're into taking small profits, which is fine, then you also have to take small losses. If you do have a trading plan that allows for runners, then you can afford to take a little bit bigger losses. But if you know yourself as a trader who's like, you know what, when I get $100, I'm out of there, you've got to set your stops accordingly. Okay? Not to have the courage to accept a loss and be too eager to take a profit is fatal, and it is the ruin of most traders. Now, the other thing I found is when forming a market opinion, you have to leave room for chance. And it's very, very easy, again, because how are human beings designed? Human beings are designed to be right and to avoid failure. So when forming a market opinion, the human mind automatically assumes that that opinion is right and does not leave room that it might be wrong. Okay? And what happens in that situation is traders set themselves up for failure in case something happens, in case something happens out of the ordinary. And, I've told this story before. For those of you that haven't heard it, Henry in our office, he started last January, so a little over a year and 4 months ago now. He was getting up to speed trading a demo account that was linked up to my account. And one day he was sitting there and he logged into the account as usual and they put on some trades. And I went into my account later that day to place a trade and I couldn't because all of my buying power was used up. And I was like, well, I'm flat. It's a 7-figure account. I'm flat. I should have plenty of buying power. And, I called and I said, no, sir, you have 60,000 shares of IAG. I was like, no, I don't. I didn't buy that. And they're like, no, you did. You bought it, this morning at this time. And I was a little confused. And then finally about that time, Henry had instant messaged me and said, oh, hey, this IAG trade, I'm working out great. I put two and two together. And what happened is he had logged into the real account, so the demo account. And what was curious at this time was that every gold stock on the day was down, but IAG was up like, not a lot, but it was up like 40 cents. And I thought that was kind of interesting, so I went back and I looked at the 1-minute chart on the volume, and what Henry did is at the open that morning is like 2 minutes into it, he bought 60,000 shares at the market, and it caused this huge, it was the biggest volume spike of the day on that stock. And the stock just went higher after that. I'm convinced to this day that what happened is a bunch of black box systems out there on hedge funds said, oh, wow, there's a big buyer in IAG at the open. And they just started buying it. The black box system started buying it, and the stock went higher, even though all the other gold stocks were down on the day. And the result of the story is that, it's like, okay, you figured it out, and Henry sat down and I showed him what was going on, and after he stopped sweating, because he really actually kind of freaked out there a minute, we figured out it was a real trade, is then I said, look, just, over the next, every minute or so, just sell out 500 shares until we're out of it. We can't sell 60,000 shares at the market. Do you understand that? And he's like, oh, yes, I do. And the lesson here on this is, and the reason you want to leave room for chance is because you never know what's going on the other side of the trade, all right? You may see a setup that's perfect, But there may be a guy at a hedge fund who accidentally sells, 10,000 Dow futures contracts. And it's an accident, but is that going to move the market? Yes, it is. Okay? Yes, it absolutely is, and that happens more often than you might think. So that's where you want to leave room for chance, and that's why it's important, not to get too married to any one market opinion. Now, on that, Henry had asked, he's like, he ended up making like $30,000 on the trade, and he's like, oh, and after he got comfortable with that, he's like, oh, great, are we going to split the profits on that? And I was like, well, no, but if you had agreed to in advance split the losses, if in case that trade wouldn't have worked out, then how about that? I did say that at least he had guaranteed a portion of his salary so that, he couldn't be let go for at least a certain amount of time. So I think that worked out good it was a good example, and it was kind of funny, and, it could have been a very interesting situation had I been out. What if I'd been out traveling for 2 or 3 days or something like that? What could have happened or may have happened, and, you just never know. But the point is, you got to be prepared for anything, okay? Another thing to think of, and this kind of goes into market psychology as well, is the market psychology of the markets themselves. Quiet, weak markets are good markets to sell, okay? Because at some point what's going to happen is they're going to run into a bunch of stop losses, and then the market's going to go into panic mode. At that point, you just want to be aware of it, and you should be in there stepping in as a buyer, taking the opposite side of the trade, okay? And this is a phenomenon on any market, on any time frame. And when you see a quiet market that's rolling over, okay, just remember, psychology-wise, there's going to be a lot of stop losses in that market, and people are going to start to panic, and they're going to start to dump their positions. The same is true on the other side, okay? And this is why you don't want to short a runaway market, okay? I'm going to say that again. This is why you do not want to short a runaway market. On the other hand, if you have a quiet, strong market, that is a good market to buy, okay? Because at some point it will go into panic mode where people start chasing it, and it's at that point that you need to be looking at the opposite side of that trade. So think of that. That falls into trader psychology all the time, and just to remember that. And if there's anything to sum that up, is that when you see an extreme move, you don't want to be going with that trade. You want to be finding opportunities, in fact, to go the opposite of that trade, okay? And let's see. And then another thing to think about is when you're in doubt, do nothing. Okay? When you are in doubt, just do nothing. Don't enter the market on half convictions. I'm going to talk more about this later. But you want to wait until the convictions and the setup is fully matured. Okay? If you're in doubt, there's a lot of things going on there in the markets that don't make sense. Like, I don't know if I should buy that or not. Now today, I'll give you an example. Today I'm watching Netflix. I saw Netflix was up today. And I want to buy a pull. I was sitting there watching around $237, and I wanted to buy some calls on it. Now it's at $240. Did I buy calls? No. I had doubts about buying it at $237 because it was already extended on the day. So I'd put in an order to buy a pullback, to buy options on it when it pulled back to $235. To me, that was a great area to get in. Now, have I missed the trade today? Yes. Is it possible that over the next several days it could sell off into a panic mode back to $235? Yes, absolutely, and that's what I'm looking for, okay? So am I frustrated that I missed a couple of nice dollar point moves today on Netflix? No, okay? Where my doubts came into play is going, wow, this thing's breaking out right now. A lot of people are chasing this market higher. I want to be there when they get flushed out, okay? So that's what I mean by that, is that if you're looking at something going, wow, that's really moving, I want to get in that, the doubts come into play as to when you should get in, all right? And I look at that, so my doubts is kind of like, well, gosh, I really would like to get that at $235. That's where you want to get in. So I'll have a good till cancel order on the rest of this week, and if we can flush down to that level, I'll get it. And guess what? If it doesn't flush down to that level and I miss a trade, that's fine too, okay? It is perfectly acceptable to miss a trade. And we're going to talk more about that in a minute. What you want to do is be patient for those really, really good setups. So yes, I would have made money on Netflix today had I bought those calls, but I want to be prepared for the flush for the people that are racing into it and piling in, and they're going to get stopped out, and they're going to be feeling a lot of pain. If and when that happens, I want to step in and take the other side of that trade. All right. Another thought on this is to respect your limitations, because your limitations will not respect you, and in fact, your limitations, if ignored, will destroy you. All right? So you want to be honest with yourself and identify your limitations. Is your limitation that you are not patient and you can't wait for a trade setup? Well, then you're going to want to consider two things. One, you're going to consider automated trading, where it takes you out of the equation. Or if your account's bigger, consider hiring somebody to take the trades for you. Okay, it's not a big deal. You can do either one of them. And that way you're respecting your limitations, that you're not a disciplined trader. Okay, your limitations will not respect you. So that's one way to do it. You also want to realize the way human nature works is that, I have this quote here, is that in his secret heart, every man thinks the universe is especially hard on him. And this is so true in the trading arena, is that everyone thinks that they're the ones that are having the toughest time, and it has nothing to do with you. It's how you interpret the events. But in general, if you think that that the market or that the universe is being especially hard on you, you are again not accepting failure. That's a way to avoid failure. Oh, it's not my fault. It's just, that's just the way my cards have been dealt, and that's what I've got to deal with. Okay? And it's all BS. It's your human brain trying to make you feel better about not being a failure. Okay? Again, sweep that aside. That stuff does not matter. And if you can recognize that, if you can recognize when your brain's coming into play and playing tricks on you and trying to realign things to put you in the best light, no matter what the situation is, that is detrimental to you as a trader. Okay, you sweep it aside, and you just own up to it. It's like, wow, I took this trade, it didn't work out. Okay, it was my fault. No matter, either you can, whether it's saying I failed at this trade, is one way to do it, but it's not necessarily that it's just a failure. It is. You don't have to label it as anything like that. And if you're going through trades thinking like, wow, the universe is really hard on me, the trading gods keep messing with me, that's just your brain trying to make you feel better. Okay, so you don't have to accept having failed at that. And again, the reality is, as a trader, that a loss is not a failure. Okay, a loss is a loss, and that's it. So get your brain wrapped around that, because if you can identify those periods in time when you're doing that to yourself and eliminate it and just sweep it aside and realize that that's just your brain playing tricks on you, then you will be able to start doing this for a living. Okay, so many people have the courage of their opinions. Few have the courage to abandon their opinions. If you are in a trade and you're very, very bullish on it and it just is not working out, you do not have to fight again to prove yourself right. This is where all that nice little nasty human nature comes into play. It's like human beings are just skin bags full of petty desires, and if you're in a trade and it keeps going. A classic example is, say your full size is 10 contracts, and you get into a trade, you've got your 10 contract, and it's going against you, and it's close to your stop. So you pull your stop and you double your position. All right, you are doing this because you have the courage of your opinion that the market will eventually go higher. Okay. Obviously, this could work 20 times in a row, and it only has to not work once for you to be toast. All right, if your full size is 10 contracts, you do not double down when it gets near your stop. All right, again, many people have the courage of their opinions. Few have the courage to abandon your opinions. It's okay to abandon your positions, your opinions. Another thing I like for trading is that there are two kinds of wisdom: to persist in things worth doing and to abandon things not worth doing. If you keep records of your trading, what happens is things get very, very simple very quickly. Look at the mistakes that you're making. Look at the trades that you're taking that are not working out, and abandon that. Okay? It's very, very, I know it sounds kind of almost like too good to be true, but if you go back and look at your trades, a lot of times the trades that aren't working out is because you are doing something in those trades that has a common theme with a lot of the other trades that are not working out. It doesn't mean that every trade is going to be a winner. Okay? It does not mean that every trade is going to be a winner. It just means that if there is one or two things that you keep doing over and over again that always result in losing trades, you can abandon whatever it is that you're doing. And that could be trading out of boredom, okay? Getting into a trade because you're just too excited, like the Netflix trade I was talking about. It's like, oh my God, it's at $240, it's up $6 on the day, I got to buy it now. No, that's stuff that doesn't work, and I know that from the past. And by the way, all the stuff I'm talking about is it's either stuff I've observed in other traders, but mostly it's stuff that I've gone through and racked my brains through and trying to get my arms wrapped around, how to do trading consistently for a living. So a couple more thoughts on this. Stubborn men and women do not live long financially. Okay? Again, this goes back to you want to be flexible. You don't want to have to sit there. Your main goal in trading should not be to prove to the world that you're right and that you're not a failure. Okay? It has nothing to do with trading. The foolishness of many is the opportunity of the few. And this goes back to those extreme moves. When you see the market selling off, selling off, selling off, you don't want to be the chaser. Okay? There's a lot of people getting hurt on that move. You want to come in, and that is the opportunity for the few of us that are sitting there watching this, ready to catch it with open arms. All right? Trading is a kaleidoscope, continually changing and forming new combinations. You want to take a fresh look every day. And another good one, and this is obviously one of the best ones, it's not how much you can make, it is how much you can lose, and you want to set that up as you're setting up your trading plan. Okay? Now, those are some of the maxims that I like in trading, and what I want to talk about now is getting a little bit more into that right outlook on this. Oh, there's that question. It's good. Let's see, test. So here's the thing, and I want you to get your arms wrapped around another idea here, and this is really for shorter-term trading, especially day trading and shorter-term swing trading of futures and options. Okay. And I was just looking at the questions, and I apologize for some reason. Let me see if I can refresh this. I am not I see a question. My last question I see it just says sounds okay, and thanks Doc, and I don't see anything after that, and I'm not sure why. So if you guys are asking questions, I may not for some reason be seeing them, but I'll take a look at that in a second.
Yeah, John, actually,
you guys. Oh, go ahead.
Hey, John, I'm sorry. If you scroll down there, there should be a little tab bar on the far right-hand side of your questions box for you to scroll down.
Yep.
And right now, the last thing you should see would be, if you do that, you'll see good stuff, JC. It says, can you see me now? And then good stuff, JC.
Okay, maybe it's possible no one's just typed in anything since then. Yeah, okay.
Yeah, and so.
Yeah. You know what it is? There's I see what's happening. There's three at the bottom that say sounds okay, thanks Doc, and those are frozen in place, and all the questions are coming up above them.
That's right. Sometimes that's a buggy-boo in the GoToWebinar software. What you could do is there's a little trash can to the far left of those. Those comments on the far left-hand side, a little trash can. You can hit delete and then clear those off, and then only the most current ones. Like I think Ian's. For some reason, Ian's today are stuck in place.
Oh, okay, cool. No, I see it now.
Yep, and so you can just delete his 3 comments, and then you'll be caught up with the latest and greatest, which was Ovid.
Okay, yeah, now I see it. Now I see Larry and everything. Okay, perfect.
Okay, buddy.
Okay, thanks, Rob. Yeah, I was kind of like, oh, no, it's locked up. So let me review real quick here. So you're frightened to do something because of fear of failure. Yes. We need to redefine being right in trading as following our plan, not making money. Yes, Stephen, absolutely. Funny, been there with my boy too. Yeah, no, I know, right? So he went out there and tripped the other kids. Ah, ha, ha. BlameTheMarket.com, that is a good website idea. Yeah, the tsunami warning, exactly. I mean, you never know when that stuff's going to happen. The dog ate my trade. Please review quiet, weak markets are good to sell. Okay, so why are quiet, weak markets good to sell? And if you think of it this way, what's happening is a lot of people get into a trade, okay, and say it starts to sell off against them a little bit slowly. Think of the anxiety that's building up in most traders. And they're watching that, and they've got all their stop losses below. And remember, a lot of people don't have good trading management, and so they keep, they've already got a full position, and maybe they start loading up on them even more, okay, even though they've exceeded their full position. And then what's going to happen is it's going to do a flush, a stop loss flush. And it just starts hitting so many stop loss orders, or so at some point what happens is people just can't take the pain of losing anymore, and they just get out of the market. And that tends to happen at about the same time for a lot of traders. So when you see a slow, steadily moving down weak market, just get ready for the flush. Okay, and you can either sell it or just be ready to catch it when it does flush. So it's more, just kind of getting the psychology part of it down like that. How long did it take you to be a disciplined trader? The truth of the matter is, Ruby, is I have to work on being a disciplined trader on every trade. It's just, I've been doing this a long time, and anytime I throw that discipline out the window, guess what? The market bites me in the ass too. So what I finally happened to me is I got sick and tired. I got sick and tired of being sick and tired about trading. I got so tired of the ups and the downs and the anger and frustration that comes from not following a plan, because a lot of times we all have plans. It's when we don't follow them when things go wrong and go horribly wrong. And that's where I finally one day woke up and said, enough. I don't want to do this anymore. I don't want to live this way anymore. I want to be able to live in such a way that I actually trust myself and that I'll do, what I said I was going to do. And it's an integrity issue too. If you tell somebody else that you said, hey, yes, I'm going to do this, and the integrity part is that you do that by the time the deadline arrives, whether it's, meeting for dinner or whatever it is, whatever you give your word on, you need to do that with yourself as well, right? Because what happens is if you don't, you start to lose credibility with yourself. And if you break your word that you're going to follow your trading plan, your sense of who you are actually starts to erode, okay? And if you think of it this way, one of the simplest things you can do to restore integrity to yourself and get a strong sense of who you are is to follow your commitments with other people and with yourself. And if you put together a trading plan with specifics, then by God, it's an integrity issue if you don't follow that, okay? On each and every trade, on each and every order. And if you can do that, what's going to happen is it's going to change not only your trading, but it's going to change your outlook on things. Because that comes along as a person is who you are. It's who you are in life and who you are as a trader. A lot of it has to do with that. Okay? So hopefully that helps. I see a couple of questions there. How do you combat impulse trading and things like that? And so that's again, think of it as just integrity with yourself. I know one guy who he would make money in the morning, and then at afternoon he would kind of piss it away. But for him, he just loved trading. And what he would do is at noon, he would just log out of his real account and get into a demo account. And for him, he still got to trade, but it was less pressure, and it was more kind of a game at that point. And that actually takes a lot of discipline to do that. Robert Frank, you were mentioning the Netflix trade, wanting to buy calls now. Would you still buy if the market was moving slow and it starts hitting stops? Okay, so yeah, Robert, so essentially in that situation is not what's happening in Netflix today. So today we have a market that's going, and Netflix is steadily moving higher. And it's, it's kind of missed the move. It's already up, $6.30. Where we're getting to in Netflix is a situation where you get a blow-off move, and that's where you can step in and short it. So in Netflix, if that makes sense. So in Netflix, there's two trades right now. It's at $240 a share, right? And the two trades is that, it starts to run away and gets up to 242, 243, and you actually start looking at puts, okay? Because now it's gone too far. But the other side of it is waiting for the retracement back. And typically when you get a pop like this, at some point you actually get a good sell-off during the day that's a stop-loss run. And if we could get that back to about $235, I'd be a buyer, okay? Did any of your impulse trades in your journal turn into new setups you use now? Actually, yeah, John, that's a good question. And one of them had to do with the ticks. So, like, I kind of found that, when the markets popped up and the ticks went higher, it started off as kind of an impulse trade. I actually didn't really know that the ticks were going higher. I would just say the market pop up and I'd short it. Well, then it turned into the setup of extreme ticks. Yeah, so hopefully that helped, Robert. Do you have a rule like 3 stops and you stop trading for the day? So I'll talk more about that in a second, all right? Okay, so let's judge the good questions, everybody. Thank you for sharing those. And hopefully that helps. I just want to kind of get some insights there into your own trading and everything. So here's the thing, and I know people don't like to say that trading is gambling, but the fact of the matter is that it's very similar to gambling, and that's why it's important to understand gambling money management rules in trading. So professional gamblers, and by that I mean gamblers who, same thing, have been doing it 20 years and they make their living, whether it's betting on football teams or at the track or whatever. Professional gamblers are not astonished at winning and losing. Investors are. Gamblers do not panic at a series of losses. Traders do. Gamblers learn to roll with the punches because they take so many of them. They also learn to manage their money in such a way that no one session leaves them broke. And one of the things I'm going to talk about today is money management systems that professional gamblers use. Okay, and it's something that I've adapted, and I think it works extraordinary, and it's one I want to share with you guys. All right, and we'll get to that, though, in a moment. Did you ever see that clip of Billy Walters on 60 Minutes, professional gambler? No, Dave, I haven't. If you see it, I'd like to see a link of it. If not, I'll look it up when I'm done here. Do I still trade extreme ticks? Yes, I do. Yes, I do, Nick. Okay, Dave, that'd be great. Post it in the forum. All right, so trader psych. So this isn't a new thought, but it's always worth reinforcing. You cannot think of your account as money, okay? And I know that may sound, well, let me just explain why. You can't think of it as something that will buy a car or the proverbial mink coat, like in reminiscence of a stock operator. Money is merely a tool of the game, a means to keep score. Okay, and you hear that, like, when Rob's trading in the room, that's his scorecard, right? You guys are with him every day, and it's like, how did the game work today? Well, we made $300. Okay, that's the scorecard. It's not, oh, I have $300, so now I can go buy a hard drive. You're not translating that into purchasing power, and you do have to think of it as a way of keeping score. The moment you start thinking of a gain or a loss in terms of purchasing power, you have now lost sight of money as a tool of the game. Okay, and you have sentenced yourself to playing less skillfully and more emotionally, and that's the key there. If you start getting into the mindset, and it's easy to do, if you're down if you're down and you're losing money, and you're thinking, gosh, I could have used that $1,000 to buy, a first-class ticket to Chicago or something like that. That's when you're done, because you're done. You can't trade that way. It screws with your mind emotionally. Okay, and you're going to play it less skillfully and more emotionally, and it's not going to work. So you just got to think of it as a tool. All right, and we'll talk more about that. Trading's class scope. Okay, we talked about that. All right, here's another, and this is one of the most important points. And it's simply stated: don't piss away your capital. All right. Now, there's always going to be that one trade a week or month or even a day that's going to be a really good trade. It's a nice setup where everything comes together and you see it very clearly. You take it, you follow your plan, and you make a lot of money. Okay, those trades do come up. And what happens with a lot of traders that I see is that they get bored. They feel like as a trader they should be trading, and so they screw around. Maybe for a week or so, they're getting in and out of trades. They're adding up commissions. And by the time this one good trade comes along that they should have been waiting for, okay, they get in the trade, they make money, and a lot of times they just brought their account back up to break even. And that's where I see a lot of traders getting stuck, is that they spend time in inferior trades, in inferior setups, pissing away their capital, racking up commission expenses, so that when the one good trade comes along, instead of it vaulting their account up to new highs, all they're doing is making back all the money they pissed away over the last couple of weeks. Okay? I see. I'm just looking at the questions here. Hubert mentioned putting in ideas for the next seminar. I'd like to see JC go through step by step the pin trades. Oh, sure. Yeah, absolutely. Sure, absolutely, Steve. Does my broker show you my statements? and I hope you guys understand that, this is, what I'm talking about here is not like academic theory of, it's like, oh, this is what I deduce trading to be. It's from personal experience, and plus, we obviously get to work with a lot of people. And the most frustrating thing about trading is, when you've gone off plan, and that plan and doing that is causing you huge ruin, and being able to get realigned with that. And then, of course, what happens is, you go off plan, you get a big loss, and what do? You try to overtrade, and you panic trade to get back that money, right? So it's a vicious, vicious, vicious cycle, and it comes back to you need to have integrity with yourself in trading. And you need and that goes for your entire life. That'll help you in all areas of your life. But if you can do that also with your trading, what's going to happen is you're going to start having a stronger sense of who you are. You're going to have faith in who you are, and it's going to work. So if you have, and one of the biggest things I can give you guys as advice of trading is to start keeping your word at every opportunity that you can. If you tell your spouse that you're going to be home at 6 o'clock, you give her your word, and you're there at 6 o'clock. If you tell your, if you tell somebody at work that you're going to have a project done by 3 o'clock, you have it done by 3 o'clock come hell or high water. How that translates into trading is that if you tell yourself you're going to follow this trading plan and you're going to wait until this, and this happens before you take a trade, you now have the integrity with yourself that you're going to do that. And the only way to keep integrity with yourself on that is to do it on each and every setup. I'm telling you guys, that will change. It'll change your life, and it'll change your trading. Is to start thinking of it as an integrity issue with yourself. Okay? And it sounds kind of crazy because you think, oh, it's just a trade, but it's not. It's everything. And that's a one solid way to get back in alignment with kind of doing this. Don't worry about trying to make up the money you've lost. Just worry about just bringing integrity to yourself in your trading, and that's going to move you forward to the next step. I mean, there's different levels. People are at different levels when they're doing this, and that will take you immediately to the next level. Okay? Yeah. No, I ran out of gas. I had a flat tire. It wasn't my fault. Yeah, and the thing is look, if you say you're going to be somewhere at 3 o'clock and you're not, it's the moment you just have to call that person and own up to it and face the consequences, okay? And that's how you restore the integrity. You have to do the same thing with your trading, all right? The moment you stop following your plan, you own up to it. You get out of the trade, you flatten out, you acknowledge what you did, and now you've restored integrity with yourself, and you wait for the next setup, all right? It's simple stuff, but that is the key to doing this, guys. That is how you go from being a trader who's always going up and down and chasing markets to actually being able to do this for a living. All right? It's really, really critical. Face your wife. That's brave, dude. Yep. Yeah, and it's like, okay, so Tristan, well said. I think that's why Rob's style of trading has made such a difference in my trading. I'm no longer having to claw back. Yes, and you guys, and it's great because in the room you see that every day. Rob has integrity with himself. He has the specific levels that he's waiting for, and if they're not hit, he doesn't take a trade. Okay, it's as simple as that. All right. All right. So, and again, and the thing about this is, and I think a lot of people don't realize this, is they think that there's the regular life and then there's trading, and the two are totally intertwined. How you behave in your real life is going to show up in exactly how you trade. And actually, trading is a good kind of a shrink because it'll show you where your issues are in your life as well. Again, if you're not following your trading plan, where else in your life are you not having integrity? All right, clean that up, and you become a different trader. So in the great game of life, everything is in play. Everything: your time, your money, your relationships, your social position, your education, your appearance, your health, your businesses are all simultaneously a hand of life cards and a stack of life chips. You must not piss away those chips. Okay, your quality of life is determined by how you invest in those things. So for trading, what that translates into, again, is keeping integrity with yourself and following your damn plan exactly as it was instructed on your next trade. Okay, you can do that in an instant. If you don't, we're going to be here again next year, and you're going to be wondering why you keep losing money and why you keep feeding the alligator. Okay, and this doesn't mean that you're going to make money on each and every trade. It means you're going to get ahead of the 90% of the people who are struggling with this. All right? All right. Now, here's what I want to talk to you guys about, because I think there's a balance here in trading. I know there's definitely a range of accounts that people trade, but most people are starting off with smaller accounts. And I've been looking for ways to maximize, from a money management perspective, the best way to maximize smaller accounts, all right? And this is it. So this is just called the plateau method, money management. So what I found, and this is very true for me, this is a very, very personal for me because this is how I eventually had to figure out like how I could do this and pull money out of the markets. So many traders are really good at running an account to a specific amount. So maybe they start with $25,000, they run up to 40, and then from there everything begins to fall apart. Okay? For whatever reason, mentally they can't grasp that $40,000, maybe $40,000 is too much, or maybe now it's house money. Okay? Oh wow, I got $15,000 of cushion here, so I'm gonna start playing bigger. You're too enthusiastic. You start doing stupid trades. Whatever it is, it represents a plateau. Okay, and I think a lot of you guys are familiar with this, where you're fine up to a certain amount, and then you start doing stupid stuff. All right. So my own plateau has grown over time. For a long time, back in the late 90s, it was $50,000. I could run up an account to $50,000, and then it would just start having lots of problems with it. Okay, and then that grew. I don't know exactly how that grows, to be honest. It's like I think it's more mental. Like you go to the gym and you're lifting weights, and over time you can lift more weights as your muscles get stronger. And I think that has a lot to do with it. Is mentally you just get your arms wrapped around, more and more money, which a lot of times is why it's better to think of it as in terms of percents instead of you don't want to think of it in terms of purchasing power. So So now what I found is I'll set up different accounts. Obviously, it's different for things like an IRA and stuff like that. But like a trading account, for me, for like say an options account, I found that a good size is trying to take about $500,000, give or take, at the beginning of the year, and then trying to run it up to 7 figures. All right, that for me is a good. It's kind of a good measure. And at that point, start taking, and I'll show you what the plateau method is. Now, I couldn't have done that when I started trading. Okay, but that's kind of where I found my comfort zone at this point. Does that mean that? Well, I'll just keep talking about this because I think this is a fascinating concept, and I found that it's really worked well for me. So I want to share it with you guys. So this is a specific problem that I've known when I figured it out. It just changed my trading overnight. So here's a strategy, and I'm going to lay it out with a hypothetical $10,000 account. Okay, so this is a strategy for short-term trading of leveraged instruments such as futures and options. And we're focusing on day trading and shorter-term swing trading, okay? So we're going to start off with a $10,000 hypothetical account. Your goal is to run it up to $25,000, all right? Now, think about it. If everything that we've talked about up to this point, okay, you start employing that, meaning don't piss away your cash on setups that are not good, okay? Don't trade out of boredom. You're going to really be patient. You're really going to wait for when those times come together. And one day you may make $50, and the next day you may make $1,000. All right, there's no time limit for this. You're not trying to do it in 1 day or 1 week or 1 month. It just depends, on the setups that you get. But your goal is to run it up to $25,000. At this point, you're then going to take out your original $10,000 plus a profit of $2,500, and it's going to leave you now with an account balance of $12,500. Okay. Now your goal is to run that $12,500 up to $31,250. Okay, essentially what you're doing is you're taking whatever your starting capital is and multiplying it by 2.5 times. All right? Now, if and when you get to $31,250, you're going to take out half of that account balance, which in this case is $15,625. Okay? And now you've got an account of $15,625, and your goal is to run it up to 2.5 times that $39,006,250. You could round that up to $39,100. All right? And then once you hit that, you're going to take out half and continue. All right? So what's happening here is you guys are, in this situation, is that you are managing what's called the plateaus. You get up to a certain amount. Instead of getting very enthusiastic at this point and pissing away and doing these stupid trades because you have house money, you are actually now following a process. When you get to that point, you're then following a process. Okay? And again, I want to emphasize the time on this isn't critical. It might take you a year to do this, okay? Or it might happen a week if the markets are really, really good. So don't get caught up on the time. It's just the amounts. The key is you follow your trade setups, and when the plateau is hit, you take the money out and you set a new goal. All right? So let me see a couple of questions on there. Thanks, Dad. Sure, Thomas. John, can we get a copy of this? Hey, John. Yes, I'll get you a copy of this. Where are you moving the seed money to when you remove it? Mel, I'll talk about that. Does this stop you from trading too big then? 2 steps forward, 1 back in terms of size. Yes, exactly. So there's a couple of things going on here. Let me finish this part, and we'll talk about this because this is really an important concept that I want you guys to get. So this goes back to not pissing away your trading capital. Okay, and when you're trading leveraged instruments, one good trade can have a big impact on an account under this trade, under this plan. Okay, that's why it's critical to keep your losses small. All right. And it's okay to scale into trades and all that kind of stuff. And by losses small, what I mean by that is not exceeding what your acceptable loss is. And so let's keep going into this here. Now, here's another part of this which I like about it. And I realize that not everybody's going to be able to do this, but this is what I would encourage you to do. Because I know a lot of people too they're not trading with all their capital, and some people are trading with all their capital. So let's go through both scenarios. Let's say that you have $50,000 that you've set aside to trade with. Then I'm suggesting that you actually use $10,000 as your starting stake to get going on this program. Okay? Now, you can take bigger risks, and in this case, you can take bigger risks. You could risk 5 to 10% of your equity on each trade because it's only 10% of your 50K. If for some reason your 10K gets wiped out, then you have another 10K to put in and try it again. Okay, and that's part of the point of this, is that you're spreading it out and you have stakes. Now, not everybody will be able to do that. I know some of you just have 5 or 10K is all you have. And that's totally fine. In that case, what you're going to do is you're not going to be able to risk, like, say, 10% on every trade unless you have what I call the Porsche setups that are coming together. Okay, and what's a Porsche setup? That's when you have, if you're day trading off of a tick chart, it's got a squeeze. Well, so does the hourly, daily, and weekly, something like that. When those all come together, which doesn't happen very often, those tend to be your biggest trading opportunities. In the case of you're trading a smaller account, the answer is actually to trade less frequently, okay, which may not make sense, but that is the answer. You trade less frequently, and you really are patient for the setups that all come together, okay? And in that case, you can do this very same thing. So why does this work? First, you got to remember it assumes the following. It assumes that you're patient for a setup and you're not trading out of boredom, i.e., this is where the integrity issue comes into play. You have integrity with yourself. You're going to keep your word with yourself that you're going to follow your trading plan. Okay? You're also trading in alignment with larger time frames in order to maximize runners. In other words, you're not doing too much counter-trend trading. Yes, if maybe the euro has fallen 200 ticks, but if the daily and weekly trend are higher, that means you're looking to be a buyer. Okay, so what I mean by trading alignment with the larger time frames is you're not really focusing on counter-trending the larger time frames. Third, it also assumes that there are days when you don't trade because nothing is setting up for you. Okay, so this is not something where you're having to trade every day. Second big point. It sets you up for a scenario that freak results are possible. Okay, a lot of times in trading or investing, you hear like 6% a year, 8% a year. That is not something that we as traders are interested in, okay? If you're trading a smaller account with leveraged instruments and you're picking your trades with caution, and once the trade's set up, you're boldly going into that, and then you have integrity and following your trading plan, it is very possible to have freak results, okay? You don't hear of hedge funds making six-figure percents on an account. That can happen in smaller accounts because we're not trying to move the markets or anything like that, right? People who overtrade or trade without a specific money management plan all fall into the category of 90% of the traders who are going to lose. All right? Under this money management scenario, you're trading speculatively with smaller sums, i.e. you're not trading with your entire amount of trading capital, okay, on a limited number of solid setups, and it opens up the opportunity for extraordinary results. So you combine that patience of waiting for those limited number of setups with this plateau method of managing your money. This allows you to keep the money you make, all right? Third, it gives the trader a working methodology to focus on. I think this is really, really important because what I see a lot of traders getting into, and again, this is speaking from personal experience, is that if you get comfortably above your starting capital, you start trading differently. Just as if you get scarily below your trading capital, you start trading differently, right? In this case, as you have a specific goal to reach, and I think that's important. Instead of just looking for the next winning trade, you actually have a plan to reach a specific amount of money, and at that point you have a specific plan of what you're going to do with that money. Okay, and we'll talk more what to do with that money in a second. So what I found in my short-term trading, that combining all these together have proven to be the best methodology of turning smaller sums of money into significant cash, which is obviously what we are looking to do as traders. Okay, and the other piece of this, and I didn't put this in here, so let me jot it down. Parts, workout, build muscle. The other part of this that I don't have as a bullet point here is that this is a way for you to get your brain wrapped around trading steadily increasing amounts of money. Okay? Now you could go through, if that makes sense. So at some point, you could start with 10, and maybe a couple years later, or how it doesn't, whatever. The time part doesn't really matter. Then you're starting with $100,000, and then you're trying to put it up to $250,000, right? And then so you're just trading in increasingly larger numbers, and it's a way to train your brain to handle that so you don't freak out on it. All right? All right. So I think that was, yeah. All right, so that was that method. So I'm sure you guys have questions on this, so let's take a look. Okay, so where are you moving the seed money to when you remove it? All right, so that's a great question, Mel. There's different things you can do with it. Here are the 3 things that I do with money I pull out of my trading account. Investing-wise, some of it obviously I'm going to spend. One, I specifically will buy land or precious metals. Okay, so a portion of that will go into, I've got a farm up in Nebraska. I'll buy more farmland up there. I'm looking to buy some more out in the hill country in Texas. To me, that's just something tangible. Okay, that's something tangible that the markets can't take away. So that's one thing I like to do. 2, I put it into a longer-term trading account that focuses on weekly squeezes. All right, to me, those are some of the best opportunities out there. A weekly squeeze on silver that can go up $10 an ounce, and I'll do that typically with either options or even non-leveraged instruments. That's not an account I want to worry about. I don't want to see violent ups and downs on that, but that's a part where I'll do it. And then from there, it may just be, it's just where you're, whatever you're interested in. I'm interested in, it could be like, it's like backing other business ideas. I mean, I've got a buddy from high school. He'll go out and rehab houses, and I'll put up the money for it. Somebody wants to start a business and they need some money, and that makes sense. And it's not throwing stuff away, but just looking for opportunities for that. And it just depends what you like to do. So it's kind of, here's the main thing: is when I'm pulling money out of the account, I'm not looking to go and buy a bunch of crap. Okay. Some of it, I mean, of course, there are some things that you're going to need or want, and that's fine. But for the most part, it's looking to then put that into other investment vehicles. In this case, land, precious metals, investing in other businesses, whatever it is, whatever stuff you're interested in. Or maybe you've got a hobby that you're passionate about, if you want to fund that or something like that. But the point is that's money that you can go do something else with. Yeah, that's a good, Stephen, I suggest you go to portion to your church or charity. Absolutely. There's a charity up in Chicago called Dreams for Kids. That's where some of the money goes for me. So yeah, I do not just, and some of it will just be cash on hand. You park it in a money market account just so you have cash on hand. There's different things you can do, and it's going to be different for everybody. Everybody's going to have different things that they like to do with their money. Okay? And yes, and I will be posting these slides. As soon as I'm done, I'm going to upload them to that link that Henry had posted earlier, the box.net one. All right? Thomas, I'm serious. Thanks, Dad. I'm 54 and still need a good talking to. And I do, and there's people that I say thanks, Dad, to, because they remind me of things that I either forgot or need to relearn. Speaking of that, I've got an 80-acre farm for sale. Let's see. Yeah, I took one of the seminars. I took different seminars and stuff like that, but a lot of it had to do with the integrity thing, and that's something I'd learned something about a while ago in trading, but it really hit home how if you're not following your trading plan, you are now out of integrity with yourself, and that just rolls. It's like a snowball gathering downhill, and it just that's where it turns into just all kinds of nasty things, all the way down to addictions and things like that. It just comes down to having integrity with yourself, not only in keeping promises that you make to other people, but keeping promises to yourself. And in trading, the biggest promise you can keep yourself is to follow your trading plan. And I promise you that'll be one of the biggest things you can do to impact your life.